Hey guys, I hope that you are doing amazing and welcome back to the North Investor. So in today's video, I will talk about one stock and one company that has been recently talked a lot in the medias and in the news because of its recent announcement of 33% dividend slash for the next periods. And I will give you my honest and neutral opinion, even though for me, I consider it as one of my top 5 Canadian dividend aristocrat stocks that I own in my portfolio. But I will give you my honest and my totally neutral opinion on these stocks. So this stocks is actually one that I've learned about this summer, and I've discovered it this summer when it was really low. So I will give you my opinion about the stock presently and not about this summer, about the analysis that I did with the current market. But as always, I am not any kind of financial specialist, so don't take everything and every advices that I will give you for gold in this video, because it's my opinion and it's only my opinion. And yeah, for example, you may have a different tolerance risk and a different time lapse than me, so it's really important that you do your own research and your own analysis about these stocks. But now let's go and continue with the presentation of the company and of the stocks. So today we will talk about one of the biggest Canadian REITs, which is called RioCan. So before to talk about the company itself, let's take a look at what is a REIT, because you might wondering, but what is a REIT? So a REIT stands for Real Estate Investment Trust. So basically, a real estate investment trust is a company that will own, manage, and finance some different rental properties all around the world. And in this case, it will be RioCan that will own and manage some different companies and different rental properties all around Canada. So this company has been founded in 1993 and it worth more than $17 billion, which make it the second biggest fiducia in real estate in Canada. So it also owns more than 250 different rental properties around Canada. And what is important to understand is that most of those rental properties are coming from retail companies and retail place. So it makes that with the current situation that is in Canada, which is some major lockdown in most of the big cities and most of the provinces, it makes that those retail companies are getting their revenue and their income decrease a lot. And at the same time, it makes that RioCan has a big shutdown and a big diminishing in their income. So it affects also their income, and we will see what is the impact of this pandemic in detail with the analysis of the company in detail that is following. So now let's take a look at the analysis in detail of the important data and ratios from RioCan. So before to start, I just wanted to say that I use Yahoo Finance to analyze my stocks and also to follow the financial actuality. And it's really a great website and it's totally free if you want to try it. It's the one that I could recommend to you. So now I just wanted to present to you a little article that present the slashes of dividend, and this was made the 4th December, so it was last Friday, and presently I am filming this video. We are the Monday, so the 7th, and it happens really. It was really close that this news happened. So right now, this is just saying that this RioCan, the company, slashes the dividend of 33% last Friday, and that it was a challenging environment. So basically, it just said that the stocks would normally decrease and go lower than what it was. So we will see in this video what actually happened. So I will just go to straight to Yahoo Finance. So this is RioCan. This is the page of RioCan real estate. we can see here what is the current price. So it's 17.83. So today it actually gains 18 cents, which is actually good with the news that we learned last Friday. So if we look, this was the previous close, so at the beginning of the day, the open. But I don't want to go too much in detail about that because it will be the topic of a future video in my channel about how can you analyze stocks and how I proceed to my analysis when I do it for my stocks. So it will be the topic of my future one of my future video. But so this is the bid ask. So this just those two show basically the liquidity of the stocks, which means what is the price that the buyer wants to buy the stocks and the seller want to sell it. The difference of it is the liquidity and the volume of, so the number of stocks, okay, and the market capitalization, which is an important data in this case, because to me and in my book, a big company will have a market cap of 1.5 billion and more. So I mainly invest in those kind of companies because they are more safe to me and they have more money to handle it and to manage it. So they are more safe. And so yes, so in this case, you can see that RioCan is some safe company in my book. So yeah, and we can see over here that this is the presumed dividend. Actually, it's 8.16. So it drops from before it was approximately at 11.10, 10 or 11%, and now it's 8. And normally with the news that we saw, it should be around between 6 and 8%. And the last dividend has been paid in the 27th November. So now let's just take a little look at the chart. So over here, this is not really interesting. This is just for today on the 5-day. So as you can see, the drop after the news that occurred at the 4th December, it's actually dropped like from 18 to 70 to 16, I think. Yeah, to 16, 17 at the beginning of the day. However, during the day, it actually climbed up. So it finished the day at, let's see, at 1765. And right now it's at 1780. So it really didn't lose a lot because it was at 18.6 and we are right now at 1780. So yeah, it didn't really go down that much. So we see that the news didn't has a big impact, and this is mainly due to the fact that in my book and to me, it just shows that the board of director of the company knows how to manage their company, and I prefer personally that the company decide to slash a little bit their dividend and say, okay, well, I will be able to pay you the dividends. However, it won't be as much high as it was before. So it just downgrade a little bit, but they will be able to pay it. Compare that if they kept the same dividend, they might not being able to pay it for the future. So this is it about the chart. And if we look at let's say on 1 year, maybe 5 year, yeah, well, 1 year it's okay. So we can see that with the crisis, so at the beginning of March, it dropped, all right? So it was at 27, and even the years before, it was at 27, 28, and around this price, and it dropped, all right, to 15. So personally, I bought it when during the summer when it was around 14.50. And right now it's at 18, so I almost did like 25% of capital gain on the stock, plus I earned all the dividends. So it was really a great buy on my side. And if we look at the statistics or the main ratios from the company on the market cap, so as I said, it's presently of 5.77 billion. And as we saw during the last month, it was lower than that. So it really gains more value compared to the past month. However, if we compare it to last year, where it was, so we saw that it lose almost 3 billions. So it lost a lot of value compared to the last year. And now, if we look at another ratio that is really, really important to understand, so I don't want, as I said, to go too much in detail, but this is the PE ratio, which is the synonym of price per earning ratio. So usually a great ratio, so a cheap stock would be considered cheap when the PE ratio is under 15. And in this case, we can see that presently the ratio with the up that has followed the, I think I didn't show you, but I will actually right now. There was a up after the, over there, okay, there was some ups. So the dividend, not the dividend, the stocks gained some value just when they found the vaccine. So you see that over there it gained a lot of value for from 14 and a half to almost 18. So it gains a lot of value, and that's why presently the stock seems to be like overvalued right now with this ratio. But if we look at the last dates and the last semesters, we see that when I bought it, actually it was really cheap. So it was around 6.5, so 6.5, all right. And even like 52, it's quite high, but it's quite high, but it's not that bad. But with the up, the increase of value that the stocks earned recently, this has been the impact on this ratio. However, it won't be the only ratio that we will look at. So now let's just take a look at the historical data. So this is representing the price. So we see that the price usually stay in the same bracket of price. So this is representing the month. So it actually climbs a little bit, but it was around 14, between 14 and 18, all right? And this is the dividend that has been paid like every month. So right now, I'm just gonna go on my broker site, which is a French-Canadian broker. So it is in French, but I will present you another ratio that is really, really important to understand. And this is the payout ratio, all right? So the payout ratio is basically when you see the retain, well, actually this is the ratio that shows to people how much the company is able to pay its dividends. So it's just representing basically the retained earnings, so the earning after all the charges, so the benefits after all the charges at the end. And what is basically the payout ratio? It's the percentage of this earnings that is allowed to the dividends, so to pay the shareholders on dividends, all right? And the other part is used to basically make the company grow more, so to help the company to grow more. So in this case, when we look at 2019 and all the past payout ratio, we see that it's pretty good, because usually a great payout ratio is considered really good and really as a great payout ratio when it's between 35 and 55%, all right? And in this case, as we saw in the past, their past dividend was around 10 to 18%, which is really, really high. And they were still able, as we see here, to pay it frequently, all right? So this is an important ratio. However, this year, maybe it will be a bit higher, their payout ratio, because with all the deficit that they did with the lockdown and the pandemic. So we will see later on. So this is on it's representing the third semester of RioCan. So this is the official paper from RioCan. So I just wanted to share with you this because it represents the total earning of RioCan. So on the last semester, this was 300,000, and we see that compared to last year, there has been a decrease from the numbers, and it was the same for the previous months during the year. So we see that it really has an impact. The pandemic really had an impact on the earnings of RioCan. And finally, for this analysis, I wanted to finish with showing you that RioCan is really safe and a really great stocks to receive some monthly payment, because you always need to keep in mind that RioCan is offering to you guys a monthly payment, which is pretty rare, but it's a great way to have some monthly payment to pay the whatever you want, or to accumulate them and to have some compound interest. So this is your option actually. But just to see the distribution, we see that since, let's take a look, so 2020, so we see that every year they are paying dividends. All right, so there's never been stopped to their dividend, and so until 1995, and it was the moment where basically they created the company. So it really shows that their historic of dividends is really good, even during the pandemic and during this crisis. So they are constantly paying their dividend, and it's really important for a dividend aristocrat company such as RioCan. So now let's just continue with my personal opinion about this stock. So as we saw with the analysis that I just did, the current situation, and in my opinion, this company is very sustainable for the future. However, right now, as we saw, the price actually climbed up really fast. So in this case, what I would do probably is I would wait a little drip before to reinvest in this company, because right now, as I said, the price is a little bit overvalued. And for those who doesn't know what is a drip, basically it's when the price of the stocks drops a little bit. So maybe you can wait for a drip. However, as I said, in my opinion, this company is one of the biggest and one of the most important REITs in Canada. And in my opinion, it's with Brookfield. Those are my two favorite REITs company in Canada. So they are really interesting to watch. And in the case of RioCan, what is the advantage that it has on Brookfield, in my opinion, is the fact that it's providing some monthly payment. And this is really important to understand, because with the slash of dividend that they announced recently, to me, it personally reassures me, because it shows me that the board of directors, they know what they are doing. So they are planning for the future, and they are planning for the future and of the company, so to preserve the company and to be able to pay the dividends. Because if they say, let's say, we're going to continue to give you a 10 to 11% dividend, but one time, for example, they are not able to pay. So I prefer that they lower the dividends and that they are able to pay us. And because it's a monthly payment for investor, like personally, I love to get some passive income ways, and this monthly payment is a great passive income way. So I love to get those dividends as well 12 times per month, 12 times per year, I mean. So it's really a great company, and with the current situation that presently Canada will begin to vaccinate people, I think in the next weeks, it makes that the investor and the population starts to see the end of the tunnel. So they come to see the light at the end of the tunnel. So it's really positive for them. And I think that the company with their slash of dividends, it's not permanent. So it will only be for a small period, I think, and still a dividend of 6 to 8% in long term, obviously. I think, and in my opinion, this could be a great company to get in your portfolio if you like REITs, and with the news that we learned recently, could be a great company, even though the price is a little bit high right now. But as we see in the future, it will recline until at least $26 as it was before the pandemic. So as always, if you like this video, don't forget to drop a like, and also subscribe to this channel if you're new. And I would like to really see your comments about this video, so you can give me all your feedbacks and what did you think about the video, and what would you like to see in the future videos. And if you have some different opinion about RioCan compared to me, don't be shy to give me your comments, and we could talk about it in the comment section. And obviously, I hope to see you soon. Bye!